The Federal Reserve expanded its balance sheet again, no surprise there. The government has long ago run out of funds, increasing their deficits at record speed. No surprise there either. The jobs are going away in many cases permanently. That puts extreme deflationary pressure on the economy as a whole, which in turn gives the Fed an excuse to keep the printing presses rolling, funneling money directly to their friends in high places. Now watch the docile many cling to their $1,200, beg and plead for more from the Federal Reserve, not knowing a single fact about them. You came here for the truth, so let me unveil that for you. Today, I want to look at what the Fed is doing. I'm going to show you they're expanding their balance sheet. Let me give you a little spoiler. We're going to talk about the economy, and I want to show you the 4 stocks that I told you need to buy back in 2018. Since that time, their performance has been unbelievable. I've got it in black and white. I've got the proof for you today. We're going to look at that and so much more. Let's begin. Every week I give you the update, and you can see right here the Federal Reserve balance sheet is getting awfully close to $6.4 trillion. It's definitely heading there. And I want to note also that this has expanded at a rate of approximately $2 trillion in just over 4 weeks. We're looking at over a month time frame. They have expanded their balance sheet at $2 trillion. We have never seen anything like this before in history. Even if you compare it to its peers, the rate at which they're expanding their balance sheet, which is literally printing money out of thin air, buying up assets of all kinds, this is definitely historic. You look at it as a percentage of the GDP, it's been increasing. You look at it in historical terms, it's been unbelievable. Okay, I'm just amazed at how fast they are expanding it, and it doesn't look like it's going to stop anytime soon. The direction is clearly up. Now, what exactly are they trying to accomplish here? Well, if you look at it from different angles, you start to paint a different picture, in fact. Many would say that they're trying to prop up the banks, they're trying to prop up the major corporation. That definitely could be something. I would agree on one level. There's another level, though, that we need to look at, and that is the dollar. The dollar is only strong right now at this time, despite all the money printing, because all countries around the world are devaluing it. But the goal of all central banks is, in fact, to completely destroy the value of their currency. And you're thinking to yourself, how the heck is this possible? Why would they want to do that? Why would the Federal Reserve want to destroy their currency? Well, you see, they have complete control. These globalist elite do not operate with one country in mind. They all work together. Look on the back of the bills, and you're going to see something real interesting there. Of course, you get the all-seeing eye and the pyramid. Many don't want to look in that direction, but ignore at your own peril. This article here out of Bloomberg is basically talking about the stimulus money, where people are putting it. I noted a lot of these examples that they show you that people are paying down their credit card debt. I think that's interesting because while I think that's a good thing to do if you have any money and you're struggling to pay down the debt, but then they have the other examples where the people had actually said, well, you know what, I'm going to carry that balance over because I want to make sure that I have a little bit of savings here. And this is a total messed up world we live in, where somebody's going to be paying 17% interest on their credit card instead of just paying that thing down. I'm not here to give financial advice, but I don't think that's good. It's so important more now than ever before to pay down your debt. In fact, Grant Cardone, who you might know, he has been yelling and screaming for years, get as much debt as you possibly can, get as much debt as you possibly can, go hand over fist. He's hundreds of millions of dollars in debt and loves it. Of course, he uses it to buy real estate. And right now, he's saying the exact opposite. He's saying, pay down your debt, watch out, get rid of the things that you don't need, reduce your expenses. I've never heard him say anything like this before. And it's just really shocking to me how things have been flipped upside down. Initial claims versus S&P gains the past 4 weeks. Take a look at this. 86,000 job losses for every S&P 500 point gain. Something is seriously messed up in the system where while the individuals are finding themselves out of work, we are seeing the stock market rising. Of course, we can point directly to the Federal Reserve and the other central banks around the world, but there are times in which we get disconnected from reality and everything reverts to the mean. We had the exact same discussion through January and into February of 2020. 95% of people said it is impossible for the stock market to come down, and of course they got battered. Now you look at particular stocks like the FANG stocks, they have performed very well in comparison to, for example, small caps. There are others out there, but we see the general trend has been up since its low point. That's when you know something's wrong, and of course, as I said, everything comes back to reality in a matter of time. Cantor Fitzgerald is shrinking its workforce, breaking with the firms across Wall Street that vowed not to lay off employees at this time. They're getting rid of people at a rate that we haven't seen since the financial crisis. I'm sure other companies will do so as long as they feel that all of the bailout rounds are over. If they think, well, you know what, at this point, they're not going to run another bailout, we're not going to get any of that money, then they'll boot people out the door. This isn't the only company that's doing that, of course. We're seeing many different companies that are kicking people out, and I will show you some examples right now looking actually at Berkshire Hathaway and what they had to say about this. Right now, let's look at what Guggenheim had to say. There could be rolling shutdowns for the next 2 years, preventing a full-scale return to work, and that U.S. unemployment could reach as high as 17%. More than 20 million jobs have been lost in the past 4 weeks. It's going to be a long haul to get back to the unemployment levels that we saw prior to the downturn. That's why I'm so concerned about a longer-term plan to encourage business to get people back to work. This is very important to understand that it's not as if you flip a switch and everybody goes back, business is booming. The V-shaped recovery is a ridiculous suggestion. But no need to worry because we have this. S&P 500 now more concentrated in the 5 largest stocks than ever before. Imagine that. More so than we saw during the year 2000, more so than the year 2008. And now today we are rocketing to new highs. 2020, Microsoft, Apple, Amazon, Alphabet, and Facebook. Back in 2000, it was Microsoft, GE, Cisco, Intel, and Walmart. The pattern looks quite similar. As you can see throughout 2000, things really spiked up in terms of the concentration. And this time around, it's the same situation. So that brings me to the point I was making before. What stocks should I buy, bro? I get that question all the time. Well, I told you back in 2018, I said, give me 5 minutes and I'll prove why you must sell all of your stocks and buy just these 4. And essentially, I said it tongue in cheek. I was saying it as a joke, but in a way, actually the truth, in that the Federal Reserve and the other central banks around the world, they're printing money that's going to push certain stocks higher. We know where the money is going. And with the example, I believe I used it in this video, of the Swiss National Bank, they're buying FANG stocks. Everybody's buying FANG stocks. So if you buy FANG stocks, they're going to go up and up and up. Eventually, that's not going to be the case. Something's going to pop, but there's a trend there. That's very obvious. That's very clear. And the pattern has been present. This video was made specifically because I kept seeing it, talking about it on so many videos over the previous years. And I was just trying to outline that very specifically in this one here. You can see how overdone the PE ratios are right now. S&P 500 index right now, today, 19.47 on the PE ratio, which is historically abnormal. And specifically, the S&P 500 information technology sector is above that at 21. There was a time when these were closer together. And of course, whenever you have some sort of correction in the markets, these do come closer. But right now, the divergence is growing. The worst ever print on leading indicators beat expectations by the widest margin in over 8 years. The closely followed index published by the U.S. Conference Board measuring the nation's economic health tracks 10 indicators, most of which showed sharp deterioration. I like these type of indicators here because it kind of compiles a bunch of them into one, and you can see for yourself, not looking good. Many different indicators today are really terrible. Here's another look at it. The previous one was month over month. This one is just showing you in another way. This one here is year over year. Haven't seen these levels, of course, since the financial crisis. And then we have anecdotal evidence. We have other ways to look at this. For example, the IMF. Half of the world has asked the IMF for a bailout. What does that tell you? Does that really give you PE ratios and balance sheet levels? No, we're looking at what needs to be understood, and that is not enough liquidity. Despite all the central banks out there pumping it up with the stimulus from the governments as well, it's still not enough. We have a very serious problem that is growing very quickly. Things are contracting in any indicator you look at, but when you see how this affects real people, they don't have work. Their businesses are shutting down. Money's not coming in. That only gets worse as time goes on. It usually doesn't turn around. At least maybe there are miracles. Two quick things here. The Tampa Bay Times and its related companies received a loan of $8.5 million under the federal government's program to support businesses dealing with the issue today. This is given under the Small Business Administration's $2.2 trillion aid. This one here was talking about specifically an interview with Charlie Munger talking about Berkshire. There's some interesting stuff. I just wanted to point to one part. They're making reference at this point to what's happening with the bailouts, and then the interviewer suggests that there are probably a lot of people picking up the phone and asking Buffett for a bailout, but apparently that isn't the case. Surely hordes of corporate executives must be calling Berkshire begging for capital? No, they aren't. The typical reaction is that people are frozen. Take the airlines. They don't know what the hell's doing. They're all negotiating with the government, but they're not calling Warren. They're frozen. They've never seen anything like it. Their playbook does not have this as a possibility. So in 2008, the phone was ringing off the hook, but this time around, not the case. Essentially, they don't know what's going to happen tomorrow. It's not about necessarily will they get a bailout or not. They're just completely unsure of the outcome and how long things will be. Really quickly, I want to finish the video. Before I do, need to mention the fact that Moody's said it may cut the ratings on $22 billion of US CLOs. You remember the CLOs? I might have mentioned them once or twice before. Well, that's a fifth of all such bonds that it grades after the erosion of the financial standing of American companies backed by the securities. Now, isn't that interesting that we had this problem with the CLOs and how they have grown, and the expansion of this puts additional pressure on the financial system. They're getting downgraded. That is a very serious issue. You got to watch it. I will keep you up to date. Okay, last thing, Moody's downgrades Mexico's ratings, maintains negative outlook. This looks like we are heading in the direction because I believe Fitch and Moody's now downgraded them. So this could be considered a actual junk rating very soon. Now think about this, how it extends outward from this point when you start to see these different countries getting downgraded, the CLOs getting downgraded, everything being punished, and the rapid spiraling out of control that happens because of the derivatives that are all interconnected. This is going to be huge. That's all for this video. If you found it informative, please hit that thumbs up button. All you got to do is click one button. Don't go anywhere. Don't go anywhere. Wait a second. Click that button. Thank you very much. If you want to check me out on other platforms, I'm there. I assure you, just look up the Money GPS and you'll find me. Online sales have picked up steam recently, and that's why I created this course to teach people how to capitalize on that, whether that's just the situation we got going on today or the future trends. I created this course for free, absolutely for free for you. It's available at theamazongps.com. Learning about the financial system takes a long time. There's so much misinformation out there. If you read these two books right here, you're going to get the foundation and everything that you need to know to ask the right questions. Check it out at the link in the description if you want the audiobook, themoneygps.com. If you want to see that video I was talking about with the 4 stocks, this is the one. Definitely check it out. It's from 2018 and you can see how it's fared since. Click on it. I'll see you there.